Good morning, everyone, and welcome to the PivotBoss pre-market video for Friday, June 10th, 2022. I am Frank Ochoa, aka PivotBoss. Happy Friday, everyone. Here's a look at the ES in the daily time frame. Right now, we saw core CPI data come out, and we've seen quite a decline immediately on that data. Price was in a very narrow overnight range ahead of that data. Then we saw the big time drop from it. Again, this is a big expansion phase that we saw from yesterday's late day trading. Late in the session, we saw a big time push to the downside. It extended the move throughout the final hour and a half of the day, closing on lows. We've been quantifying this narrow range for quite some time as prices chopped around the flat or break-even line for the month. And then now you're seeing a break of the previous month's close, rather the previous month's midpoint, and that could open the door to a push right down to the previous month's low. Today is going to be very important to see how price responds after this decline from CPI. If there is some significant rejection on these lows, and say we start to recover the previous session's low price and the previous session's close, that could develop some sort of rejection tail similar to this or similar to this. That could lead to a failed breakdown and perhaps a push back into the range or even through it. Right now, again, if prices fail to push back above the previous close, that could open up a continuation. Ultimately, a failure to get back above the previous month's midpoint opens up a push to new lows. So right now, keeping an eye on prices here after that decline on CPI data, looking to see if a strong low develops. If so, again, recapturing prices back above the previous session's low and close could open up a higher low situation, a rejection tail, and that could be a failed breakdown that leads to a push higher. At this time right now, there's a big expansion down from yesterday's range. We are through the previous session's midpoint, and the expectation here is for further weakness here toward the previous month's low over the next several days. Again, we had this very narrow range that had developed here. That's about an 8-day narrow range. If we look at our ADR indicator here, that would give us about 380 plus points, 365 points of potential range. So if we take the previous session's high here of the 4140s, that takes us right down to about the 3800 level in terms of expansion. So there's enough energy here to push us down toward those lows over the next week plus. So again, keeping an eye on this move here, looking to see if a strong low develops. If not, every pullback could be a selling opportunity as this thing continues to rotate lower. Taking a look here at the NQ, you'll notice here again, very significant downside break in the previous session in an elongation of that range. A very aggressive push into the final closing bell. Today, very quiet overnight range until the CPI data came out and we saw that big time drop. And that took us right down nearly to the 12K level here, 12,067 on the low. And again, a little bit of a bounce here, but unless that bounce turns into a significant rejection whereby price starts to push back above the previous session's close price, every pullback could be a selling opportunity in the near term. Additionally, you can see over here that narrow range that had developed here has built up about 1,400 points of range, and that is enough to get us going a bit lower. So 12,750 here, you could be looking at about an 11.4, 11.5 zone, and that takes us right to the previous month's low price. So there's enough energy to push this thing right into the previous lows. Additionally, we've seen this previous month's midpoint taken out, and when that's the case, especially in a downtrend here, you tend to go to the previous low. So right now, short of some sort of significant rejection on these lows, we could be looking at further weakness here ahead on this expansion phase. Crude oil right now continuing to show some strength here overall. Failed new low developing here today, at least in overnight trading, and then a retest of those that previous low right here. That again is exactly what you would expect in the uptrend. You would expect failed new lows to be developed or defended here for a continuation higher. We're seeing that now after yesterday's inside day. It was a more narrow range day as well, so the failed new low could lead to an outside day up, and it already has at least 1 or 2 ticks of an outside day until CPI data came out, and then this thing pulled back a bit. So it already was an outside day briefly, but again, pushing through these multiple day highs could open up a bit more upside where 124 and 125 could come into play. Now this market has been averaging $4 of range per day on a 10-day average basis. Right now we're just at $2.66 of range, so we still have some upside that could be seen. Right now we're at 66% of average, so there could still be another $1.35 to even more than that of range that could be seen to the upside. Now again, keep in mind, even if this thing were to pull back a bit deeper into this bullish Pima trigger zone, that could offer another opportunity to buy the dip and push this thing much higher. Taking a look here at Bitcoin for a moment. Bitcoin down 1% at the moment. This thing still inside the range, still obviously building energy here for what could be a tremendous break. Again, this one could be holding off until next week's FOMC key level. We did see a tremendous wick that developed here that shot all the way back up to 31s, and that could be an indication of some sort of bounce back toward 31 here soon, as prices are currently trading 29,600 at the moment. Again, this range has been a long form range that could eventually lead to a tremendous breakdown at some point. Typically speaking, you don't see a long form range like this develop and then you see a big push to the upside. Instead, that could be an opportunity to open up the downside quite a bit more. So again, keeping an eye on 28K here, but we could have a short-term bounce back toward 31K in the meantime. Looking at ETH, this one's down 2.67% and still sitting on 1700, 1732 half the current last price, and right now 1700, again the gateway to much lower prices, prices that take you back toward the 902 level. 902.50 is the 100% expansion target, and then you also have the next target at 1527 as the 50% expansion target. So again, we still have some big time downside targets to be seen if 1700 is taken out. All right, that is it for now. We'll see how this plays out heading into the weekend. Happy Friday. Please be sure to like, share, and subscribe, and I'll see you in the trading room. Take care.